Hi everybody, my name is Heejin Chung, Head of Venture Investment. Today, I'm very honored to have Jeff Herbst for our Tech Talk corner in our monthly newsletter. He will share his perspectives on key trends in venture investment industry in general and venture investment in AI domain in particular. Jeff is a founding managing partner at GFT Ventures, a prestigious venture capital firm in Silicon Valley. Hi, Jeff. Thank you so much for joining us today.
Yeah, thank you so much for having me. I'm delighted to talk to you as always and really excited to share my thoughts with you and the team.
Let's talk about overall trend in venture investment industry. 2021 was the record-breaking year on every measure, right? Number of transactions, investment dollars, exit amounts, you name it. But the real negative impact of a pandemic on venture investment industry started hitting really hard from 2022 and onward. And those years were really, really challenging for both entrepreneurs and investors. But we started seeing a slow recovery in 2024. So how's the 2025 been progressing so far?
I think 2025, to be honest, is off to a little bit of a rocky start. And I think it's a bit due to kind of the political uncertainty, the global uncertainty that's, accompanying the transition to the new US government. So I was hoping for a huge acceleration this year. So far, I haven't seen it yet. I think it'll be about the same as 2024, or at least I hope it will be, but I haven't seen a huge recovery. And the reason why you haven't seen that yet is, the venture capital market relies on exits from investments. So two things need to happen. People like me, we need to find really good companies that we want to invest in. I would say there's no shortage of entrepreneurs out there who are building great businesses with great business ideas. But in order for the ecosystem of venture to really work, you have to have a robust market for mergers and acquisitions, IPOs, because that's how the investors in venture capital get money out and then put it back into the venture ecosystem. So I think what you saw happen is a lot of money was raised 2020, 2021, but the market for exits after that really slowed down. So a lot of funds are kind of sitting on companies in their portfolio that may or may not need more money, but they're not able to access necessarily the public markets or get the big exits for their LPs. Limited, when I say LPs, that means limited partners. So right now, I think we're in a little bit of a limbo period where we're really waiting for the floodgates to open. And I know we saw an IPO a couple of days ago. CoreWeave was a pretty big IPO. It started off not great, but it looks pretty good right now. So hopefully we'll see more of that, which will provide exits for these private companies and then spur the flywheel that just continues to roll. And so that's what a healthy venture market looks like. And I'm hoping we're going to get back to that at some point this year.
So what will be the key risk factors from a venture investment standpoint, and what are the key drivers for growth going forward?
So when you say key risk factors, when you're saying when I look at a company, what are the things I look at and what are the things I monitor? Well, I would say my thesis is actually pretty simple. I've always been one that doesn't like to overthink things. So one thing I learned, and this is all the way back in my days in Nvidia, was I look for entrepreneurs that are doing hard things. And when I was at Nvidia, we recognized if it wasn't hard, then anyone could do it. And it would be a very competitive market, and you wouldn't have pricing power, and you'd have a hard time selling your product. So I always look for something really hard because a lot of people don't want to do hard things. Hard things are just hard. Many people don't have the stomach to do it. There's a lot of disappointment. So I look for entrepreneurs who are solving a hard problem, whether that be, for, a new kind of AI model, whether it's a new industry perspective on how to take an industry like healthcare and automate it in a way that no one ever thought was possible. There's lots of hard problems out there to be solved. So I first look for someone solving a hard problem. The next thing I look for is is it a big market? So you might be solving a really hard problem, but if you're successful and the market's not huge, then it's great little business, but it's not something that can, do a big merger and acquisition or a big IPO. So I look for really, really big markets. And some people think too small. I'd rather have you think too big than think too small. The third thing, and probably the most important, is I look at the team that's involved. The people that you invest in are by far the most important thing. All the other things I said are very important. Team, and especially the CEO, is the most important thing, because what you realize, having been, and I've been in this industry for a long time, things are really hard. There's a lot of disappointment. Things don't go well. And I know you guys have a company that has very successful years and sometimes not successful years. I just left a company a few years ago that looked like Nvidia, looked like it a couple of times when I was there, like it might not make it. We might not have a great business. And that's the way kind of startups are. And so you need to find people who can handle the pressure, who really believe in the vision, they can motivate, they can drive people. And so you really have to know who you're investing in, and you have to feel really good about the people. So I'd say people, number one, hard problem for big market. And then once you have that, then you figure out, is this the right stage for us? Because not every fund invests at the same stage. We're early stage. There were some funds that invested at the growth stage. We like to come in early. Well, we're still not sure that this business is going to be great, but we see what I call early indications of future success. And when we see that, and we see great people solving a hard problem and a big, big market, that's when we jump in.
Okay, let's zoom in on more fun topics, investing in AI domain. What are the key trends that you have observed in venture investment in AI domain over the past few years?
I think what's happening now, though, is at least two things that I see is people are bringing these things to the next level. So, large language models are great, but in reality, they really are just approximating human intelligence through very sophisticated pattern recognition. So what we have to add to those algorithms is more fact-checking, more reasoning, more knowledge. So I think you're starting to see models that look at multiple modes of communications to kind of come to their answer. So they're not just listening to you, or taking in your written word, they're looking at what your face looks like, how do you look? And so these are called multimodal AI. So I think this is taking off in a big way. That's number one. I think you're going to start to see physical AI start to take off. We're just in the early stages, but so many companies are building, robots, whether they be multi-purpose robots, single-purpose robots, manufacturing robots. I think AI has really enabled that whole industry, and it moves a little bit slower because there's a lot of physical things that have to be built, but I think you're going to start to see that come in a big way. The other thing I think you're starting to see is right now, like a lot of AI, it operates as a co-pilot. And I think the best business models, to be honest, right now are things that work with humans. So I believe AI needs humans more than humans need AI, because AI just still isn't good enough to rely on for mission critical things without human intervention. I think the next phase is what are called AI agents, which basically take care of things without human intervention. And these are models that we can trust enough to do things for us when we're not there and we're not watching. So like the example I gave previously of things that human intervention is Microsoft Copilot. Yeah, nobody, if I'm writing something or a letter or an email and I want to use a Copilot, I want to get a draft, I'm still going to look over the draft before I send it to my boss. I'm going to check it. I'm not going to trust that thing to just send to my boss. I mean, maybe it said something really stupid. So that's a Copilot. Eventually, there will be agents that operate on behalf of us that we program to begin with, and we tell them what we want them to do, and then we're going to trust them to do it. I don't think we're at that stage yet, but a lot of people are working on it. Another example I'll give you, like this is why I think ChatGPT and large language models took off so fast. So the thing that took a long time to take off and is finally happening is self-driving cars. And the reason why they still haven't, I mean, Waymo is doing very well. They're all over San Francisco, all over LA, but they're very dangerous. So in a self-driving car, the AI basically has to be 99.999% good, because if it's not, somebody dies, right? Think about that. Like, it's very critical that it be all the way perfect. ChatGPT or a large language model, you know, if it's only 90% accurate or if it hallucinates, nobody dies. You know, I just fix it, or somebody says, haha, you know, we made a mistake. But that's why I think this form of generative AI is taken off really fast. Eventually, though, we need to get it to perfect. We need to get it to human intelligence. I think that's a long, long time away. I might be a minority view on that, but I as a VC, I see really hard problems that still need to be solved and really big mistakes that get made. So that actually gets me really excited, because that means there's lots of things for people like us to do. And we're investing in physical AI, you know, we're investing in robotics companies, we're investing in all different types of applications. So, but those are the general themes that I'm seeing. But every vertical application, every business is figuring out how to use AI in some way, shape, or form. And that's what's so exciting.
So there are a lot of different views or debates about the investment level in AI infrastructure in particular. The models get better and better. DeepSeek, for example, made a huge disruptions in the market, both from investment community as well as the industry in general. So how do you see the current level of the investments in AI infrastructure? Whether it's over investments, or whether there will be enough markets going forward to consume all these, or require more investments in the AI infrastructures going forward?
So a lot of people are asking that question right now. I'll give you my perspective, which may be a little bit influenced by the fact that I helped build the company that's supplying a lot of the infrastructure, that's NVIDIA. So first of all, the DeepSeek moment was a great moment in my view for AI, because it basically showed that you can make the output of models better if you basically do a lot more work on the inferencing side of the equation. So I guess some people will call that test time scaling. So previously, and I generalize a little bit, but people were really focused on scaling models by just shoving more data. So pre-training scaling, so more data, better models. I still think that's true. Why the amount of data that's being used by these models is very small compared to the amount of data that's in the world. First of all, a lot of it's not on the internet, it's not available. This conversation may or may not show up in a place that can be trained. So I think it's really less than like 1% of all human knowledge goes into these models. And what about, I don't even know if some of this data is right or true. So I think there's a lot of work to be done on that. So that's still going to go on. Post-training scaling, so basically reinforcement learning, a lot of work can still be done there. So that's another way, after the model has initially learned, testing it, creating incentives for it to get better and better. That's reinforced. More money needs to go into that. More money needs to go into more data. More money needs to go in that. But what DeepSeek showed us is you can take all that and then you can turbocharge it by basically doing test time scaling. And essentially, and I'm overgeneralizing, but what these models like DeepSeek do is they come to an answer and then they test it. And then this is very overgeneralized. So I'm giving you the AI for dummies approach, but it helps me understand, because I'm not, I know all the people that developed all these models and I'm not at their level, but I understand it at a basic level. But take the answer and put it back into the model and ask it if it's right, and do that multiple times. That's basically at a very simplified level with you. I think we need to do more of that as well, and it's going to require more compute horsepower. So you take all these three things together, and some people said, oh, DeepSeek's here. We need smaller data centers. We need, less compute. I think the answer ends up being just the opposite, because now we can do more with what we have, and that can free us up to go do even more on top of it and build new models and go multimodal. So my analogy to this, and when I was at NVIDIA, I started in 2001, and we were basically doing computer graphics chips, and the games were pretty good. I knew graphics would go beyond games, but people said, what, these games are pretty good. I mean, you guys sell these graphics cards for $400. You'll never be able, it's good enough, And we kind of looked around and we said, we're just scratching the surface here, because if you give people more compute horsepower, smart people find more things to go do with it. And I think that's what's going to happen in AI. So I don't think the build out is limited by the model. I think new models like DeepSeek actually help the build out. So I'm not concerned about that. I think the build out, and whether it's too much or too little, is essentially how much productivity can we take out of these models. And I think right now it's a lot. I think that as a percentage of GDP, we need to look at like how big can these data centers get. I mean, I'll just use the US as an example. I know you guys are a Korean corporation, but I don't have world GDP. But the US is gross domestic product about 27 trillion. So how much of so how much of that can go into AI? I'm not sure. I think what has to happen is the way we work and the way we allocate resources will have to change. I'm not suggesting that jobs are going to away. I think there's going to be more jobs, but it's going to create growth, which will create more data centers, and AI will allow us to do more things. So that's the side of the equation that I'm on, is I think we're just scratching the surface in terms of what we can do with AI. And any time in my lifetime that people have said that we have enough compute horsepower to do what we might have enough compute horsepower to do what we need to do today, but tomorrow's a new day. And we have more things that we can do, that we want to do. And so until we reach the saturation point, which probably is not in my lifetime, I think you're going to need more in compute. And what will happen is the stuff we can do today, 5 years from now, the stuff we do today, we can do with probably less compute, and it's easy and lower power. But there'll be a whole new level of models and things that we need to do, and we'll be running multiple models at the same time, because we want to essentially get to the point where AI can actually think like a human. That is a long time away, but we're going to try to get there. So that's a long way of saying I think we're just at the beginning. Perhaps there'll be a wave here. Like, I've never seen an industry go straight up and to the right. Usually there's some point where people get saturated, they sit back, they say, wait, I can do this, and then it starts growing again. But I believe we will look back in 10, 15, 20 years, and this conversation, we were still just at the beginning of the curve. So I am extremely bullish. Do I think it happens, immediately or in a straight line up and to the right? Probably not. I've never seen anything go like that. I think there are waves, and I think we're at the beginning of the first wave, and there'll be others.
Right, great. Jeff, thank you so much for your time today. It was a great honor for us to.
Yeah, you're very welcome. Thanks, Heejin.